Hello, I'm Kevin Gaut, CTO of INSTANDA, and thanks for tuning in to Under the Cover, replacing Andy Watts in this role. This is where we lift the lid on the lives of insurance innovators, who they are, what gets them out of bed in the morning. It says besides caffeine, but I don't know whether everyone takes caffeine anymore. What fuels their drive, not just in business, but in life. And today I'm absolutely delighted to be joined by Shaun Shenouda, President of SES Risk Solutions. Shaun, thanks for being here. I'm excited to dive into your story, your ambitions, everything in between. And to everyone tuned in, we promise to make this the best 20-25 minutes of your day. So Shaun, let's get right into it. Kind of like, why insurance? What drew you to the insurance industry? Was it conscious choice or was it an accident?
Yeah, I appreciate it. And thank you so much for letting me be a part of this. It's an honor and a pleasure. And I'm still one of those guys that enjoys my caffeine. So
good man.
Yes. Yeah, it's one of those things where I think a lot of people say they just fell into insurance. That's definitely what happened with me as well. I lived in a small town, a relatively small town outside of Los Angeles. And one of the largest employers in the area was Countrywide Home Loans. And
right.
So I had started there when I was 16. I started in the mailroom. And on my third day of delivering mail, I asked some questions to the manager that I was dropping mail off to, saying, what is this mail that I'm dropping off? What do you guys do with it? Tell me a little bit about what you guys are doing. And next thing I know, the next day I'm working for that guy. And it ended up being kind of a journey where the bank ended up buying an insurance company that was focused on lender-placed insurance. And so for the first half of my career, basically, I had worked for Balboa Insurance. That was a lender-placed insurance provider. I was on the operations side of things. So I did operations, technology, analytics. We focused on things like business rules engines and the IVR system and how to make documents electronic and scan them through, and how to avoid electronic documents altogether and kind of bring that stuff in. So I went to school for management information systems, kind of computer science, and as my undergrad. And as I went through graduate school, I thought, I really want to do something more entrepreneurial. But unfortunately, I graduated in 2008. And so it wasn't the right time to start a business or anything for me at the time. And so I kind of just progressed down my path that way.
I think that's so great that your story started out in the post room. I mean, there's kind of like a bit old school about that, but yeah, that gives you, I'd imagine, gives you a great grounding on understanding how everything works and how everything ticks. Because, for those that don't remember post rooms, pre-electronic days, that was the beating heart of the business. That's how I understood. How do you think those early learnings of really being at the lowest level have helped you shape how you consider and think about business?
Yeah, I appreciate that question. It was a wonderful experience. It would not change a thing. I got exposure to a wide variety, as you mentioned, kind of the heart of the industry, right, of the company, and just understanding all the different players and what everybody did. But also it promoted networking, right? Yeah. And so really understanding who's talking to who and how that all works, and who the movers and shakers are. And, one of the things that was maybe not a negative, but being on the operational side of our business, we were really able to work with the clients, which I really had a passion for service delivery. I always enjoy going to stores or brands that treat their customers well. And for me, it's always been about leading with service. And part of that is through innovation and technology, which I'm sure we'll get into in a bit here on how we partner with INSTANDA. But, coming from a lower position in a bank and then switching over to the insurance side of things, I really think kind of having that apprenticeship, if you will, is really important to build upon. I have a lot more insight into some of the lower, menial jobs, which actually allows me to connect with people at all angles of the company, which allows me to get information from different angles and allows me to make more informed decisions as a leader.
And so give us a bit of a flavor of how you ended, you said you kind of went to grad school and you left, and you went then found yourself in insurance, how you ended up at SES Risk Solutions and then ultimately to the creation of QUBIE.
So Bank of America acquired Balboa Insurance from Countrywide, and through that process, I was on the M&A team that was doing a lot of the evaluation of different companies that they were acquiring. And then once they were acquired, vetting out which systems and people and process and all that kind of stuff, facilities were better. And then we brought those in and kind of figured out how to migrate all the other stuff away. And in that process, I ended up working for the president of our insurance division. And he had previously worked for a gentleman by the name of Blair Shrum at his previous company, EC Sterling. He was the co-founder of that company. And so I had told him, I've been here for over a decade and I'm looking to do something a little bit more entrepreneurial. Bank of America was a huge company, and I really, I wanted to feel my impact a little bit more and have ability to make a little bit more of a change. And so, so he introduced me to this gentleman, and I went to lunch with actually his counterpart, if you will, the co-owner of SES at the time, Bill Mecklenburg, and kind of fell in love with him and Blair at the same time. And they gave me an amazing opportunity that I was not probably qualified on paper to deserve or anything like that. But yeah, it's been quite the journey. I think SES, when I joined in 2014, we had 22 people, if you will, and wrote about $25 million in premium. And now we're 65 people and writing $200 million in premium. So it's been quite the journey.
That's an amazing story that you've been on, and the journey that you're in on. And it's kind of interesting because people obviously think, a lot of people will look at insurance and think it's so staid and, it's so structured, but the stuff that you're doing, the way that you're taking things to market, give us an idea about how you think about, as SES, how you think about different things differently, and how you try and do different things differently in the markets that you're operating in.
Yeah. So for us, I think, again, we want to add value. We want to provide a service, right, that's meaningful. And, within our main product that started SES, we pioneered a product for financial institutions that are responsible for managing homes held in trust. So it's a very niche product. We pioneered that and built a proprietary technology around that to support the bank's administrative burden on that. And since that time, we've continued to grow in that market share and remain the market share leader. But it's kind of there's a limited market space for that. And so in 2013, right before I joined, the members of the leadership team, had the great idea of expanding into the real estate investor market. Similar to the banks managing properties held in trust, it's schedules of property. And so being that Blair had a lender-placed insurance background, and then I came in with a lender-placed insurance background, we thought, let's go after these big clients. And we found that there was really only a couple hundred of them, and everybody was going after them. And so, and our technology wasn't as valuable because they kind of just want to send a spreadsheet in rather than going into the system real time and making adds and deletes to the schedule. And so we ended up moving into the mid-market, where we found out let's just say there's 17 million rental properties in the United States. These are single family. 100 or 200 people own more than 1,000, but there was 300,000 that own more than 10. And so that was where we decided to go, because they were going to be a little bit more dynamic in nature and get more value out of our system. But the other 13 to 14 million were onesie twosie, what we refer to as passive investors, that we just didn't feel like we had the ability from a distribution or a servicing capability to make that efficient from an underwriting, et cetera, practice. So we left that alone for a little while. And we started to get critical mass within that mid-tier investor size. And what we learned is investors are often, at that period, we were in a situation where valuations were lower, inflation didn't happen yet. This is pre-COVID, right? And so people were buying, interest rates were very low. So there was a lot of acquisition happening. So we were organically growing with, all tides, float rising boats. So it's basically, we had the ability to grow, but at the same time, there was a lot of people changing hands, right? Properties were changing hands. And so in that, we were trying to figure out, well, all right, once properties are being sold, where are they going? And how do we start latching into that? And so we got a really good start. I mean, luck, but also obviously some intelligence behind the scenes with our chief underwriting officer, Chris Campbell, and others that were doing a phenomenal job on the underwriting side. We got a good start from a loss history perspective, and we were fortunate enough to get carrier support to build out the capacity that we needed. And really, we were a little concentrated in Oklahoma and Texas. And so we needed to branch out. And so we started building out our distribution sales force. And so we've had some fortune there with some really hardworking, talented sales reps that are building great relationships across the nation. And then beyond that, we started to, 2017, there were some wind hail events and our loss ratio started to tick upwards. And so just at that time, we were kind of on this data crusade. And I happened to have this idea of, all right, well, we need to really think about augmenting underwriting because the data that's out there is a lot more expansive than what one person can really look at. And, we had some really talented underwriters that moved around the United States. So they understand college towns, they understand weather patterns in different regions, et cetera. But they didn't know the average crime score or the median income or the average vacancy rate. So we needed to bring in some of that data. So I brought on this gentleman named Harrison Burka that we ended up hiring from an attorney firm who was going to school to become a data scientist, basically, at a local college. And so he came on and was light years ahead of where I was thinking about going. And so then we brought on a few interns, some of which were sons and daughters of our existing associates that were in our IT group. And so we kind of keep it as much in the family as we could and built out this proprietary risk management or risk evaluation tool. And from there, we started to really see some correlation to losses. And so we started implementing that and immediately saw underwriting improvement. And that gave us a lot of confidence that we might be able to do some more automation there from an underwriting standpoint. But it also allowed us to gain additional carrier support. And so we had some great relationships that paid us well so that we could then buy additional data and invest in different systems and different talent and really continue to build out that proprietary risk models that gave us a leg up on risk selection so that, we could be a little bit more expansive in our distribution, but also be more selective because more things were coming in. And so we did that, found some novel things that made a material impact to loss history. And that fast forwarded us to, let's say, 2022, in which we engaged with INSTANDA, right? And so the thought process there was, okay, now we're ready to go after the masses because we just didn't have the capability from a scalability standpoint to underwrite one property at a time. And so with INSTANDA and the third-party data backbone or backdrop, we were able to then engage with you guys and say, okay, let's build out a platform that allows us to provide a great experience. Although we have in-house application development and our own proprietary technology, it's not geared for business B2C type of business. It's more of a really strong engine behind the scenes and rating tools and policy issuance and all these other things. But it's more for dynamic portfolios rather than the one-offs. And so you guys obviously have a lot of API enablement and whatnot, and that allowed us to launch. And in doing so, our distribution strategy wasn't to go after 14 million people individually. It was through aggregation partnerships and strategic partnerships, right? And so we were fortunate to partner with the right people and really get our launch going. And it's been a fun journey since then.
That's the amazing story. I mean, got technology in my title. So as soon as you started talking, I was like joining the data dots up and building that data fabric in my head of like how you've seen this, we've seen it across so many insurance verticals. It's this relationship as data has become so much more universally available, and that's improved the quality of product, but it's also given opportunity to the likes of yourselves to really create amazing propositions and provide the insurance that people need through the understanding of the data. And that's I don't think you could have like any insurance business now without a really good understanding of kind of the underlying data and the data that's going to drive that. And have you seen that change the dynamic within your own business as to way, kind of like IT traditionally back office, moving to much more of a front office type function?
Yeah, absolutely. I mean, we're evolving, and I think that's what's exciting to me about insurance. You just to kind of circle back on the comment you made earlier, people fall into insurance, but the more I learn about it, the more I enjoy it. It's an evolving, rapidly evolving, even though it used to be this pale, male, and stale mentality, right? It's definitely now much more on the cutting edge. It's very relational, it's very creative, it's data oriented, and it's the backbone of the economy. So it's an exciting business to be in. And the way that we're evolving internally, data now being in the forefront, our underwriters are looking at the data, they're looking at the models, they're mapping things out from population property density and weather patterns and all these different things, but they're also still leveraging their own intuition as well as underwriting chops, right? And so with that, we're looking to bring them both together. So even on our automated solution through INSTANDA, we still have an underwriter behind the scenes that's looking at data and constantly tweaking. And that's one of the beautiful things about INSTANDA, that it's real time. So when I want to test a market on something, we can tweak a rate, tweak a deductible strategy, tweak eligibility, and we can see the net impact of that real time, which is not something that we can typically see on our traditional underwriting business.
Oh, and that's what you say. I think it really resonates with some of the conversations that we're having, and you know, we've been 17 minutes and neither of us have mentioned AI yet, so we probably will get banned, because you can't. There's no other conversation. But what we're seeing is like AI enablement of the human, you know, the person, keeping the person in the loop, as you've just described with data. So important that experience comes in to help understand the data, but then perhaps the model or how the data is being now presented through AI. You started to see that within SES?
Yeah, absolutely. I mean, it's interesting. We're also looking at how do you employ AI on top of human decisions, right? So even in a retrospective, if the underwriter made a decision and we pull loss data in and see if there's any trends, hey, this person consistently made this decision that yielded this result, whether it be good or bad, what can we learn from that, right? So there's a lot of things that we're employing there. And you know, from a creativity standpoint, it's really hard, right? When you're bound by your environment, your experience, and all that kind of stuff. So I think we also use AI to throw out some wild things that allow us to maybe not leverage that directly, but push us in a direction that we might not have otherwise gone in.
Yeah, it's and I think that it's the we're kind of it's an amazing age to be working in, with all of this new technology coming in. But you know, it's finding the way through the hype cycle to kind of what is actually useful, what's going to be add value to the business. Is it going to save us money, or is it actually going to take us in new opportunities? So it's really interesting to hear that you're using it to kind of give you different hypotheses to take away from, you know, we tend to get you. Sometimes within organizations, you can end up with a bit of groupthink. Everyone ends up thinking the same way. And if you're going to use that, that's really interesting. And you mentioned carriers earlier. I think you have a bit of a sort of exciting news about one of your capacity providers and the project you're working on. Are you able to give a bit of a tell us to what that's about?
Yeah, I appreciate it. You know, we've been really blessed at SES for 35 years plus with great carrier support. You know, and fortunately, we've been able to deliver back some profitable business throughout that time. But recently, Zurich has been a supporting carrier of ours on both of our programs, and they recently informed us that within the Zurich programs team, I think there's a little over 40 programs. SES recently is going to be awarded the Pinnacle Award, which is basically kind of their best in breed, if you will, on underwriting performance, budgetary performance, and kind of audit results and whatnot. So yeah, we're proud of that.
That's fantastic. Well done. That's a real achievement for you and the team.
Thank you.
I just want to pivot slightly, a little bit, kind of like a bit more about Shaun and a bit about you. You know, we were talking earlier, and I'd like to understand the worst bit of advice you've ever been given. Related to career. I mean, you can go personal if you want, but you know, we could stick with insurance and career.
Yeah, it's that's a stumper. You know, one of the things I guess that immediately comes to mind is working for a large company, right? There's sometimes some politics, and one of my leaders had told me to do whatever it takes to get to the top and be, you know, to stand out, even if it means stepping on others. And I think that political puke advice is one of the worst I've ever received. You could absolutely rise to the top without having to step on people to get there.
Yeah. No, it's really interesting. It's quite often have this conversation with my team, and you do sort of reflect on people you've worked for, and you wonder, you can see how they got there, but it's like, how did they forget that they were the how were they, you know, kind of how were they the people, the masses, or the sort of when they got there? It's an interesting reflection, and that kind of leads on to a bit about. I know that you look at things that participate in things like sleep outside of work. Do you want to tell us a little bit about how you got into that and what that means to you?
Sure. So back to Bill again. Bill had, I started in September and the sleep out's in November. So I'd been with the company 2 months, and he goes, "Hey, we're going to do this, or I'm going to do this thing for homeless youth up in Los Angeles, kind of by you, because our office is about 100 miles south of where I'm at." He goes, "You want to join?" I'm like, "Sure, I'd love to learn more about that." Right. So we go to this event, and there's 26 people, mostly executives, right? It's called the Executive Sleep Out. And the Covenant House does a phenomenal job worldwide raising funds and awareness for homeless youth. They have just facilities that help, bring this youth in from the streets, give them a shelter, but also prepare them to get back out in the world, right? So the education, health, also job prep, and all that kind of stuff. And so the first night we slept out, you literally grab a sleeping bag in a cardboard box, and we slept out on the parking lot of this facility in Los Angeles, and we raised $86,000, and I was hooked. And so I think I'm in my 11th year consecutively now, and last year we raised over $1 million and had 250 sleep outs. I'm on the task force for the sleep out with the Covenant House, and it's been an honor to be a part of that. But so Bill is very philanthropic and does a number of other things for great charities, and I've also helped be a part of through his introductions. But it was kind of inspiring to me in that up until that point, I had kind of just been racing through my own life of, getting through college and trying to buy a house and start a family and all this kind of stuff. And I was always interested in community, but maybe not to that degree. And so at SES, we have some people that participate in some of those events and some that don't. But what we try to do is, our mission statement, if you will, is to be a platform for difference makers. That doesn't just stop in the office. If you're a difference maker, you're going to be a difference maker at home. You're going to be a difference maker in the office and in the community. And we want to create the space for people to be difference makers. And so we have this 40 hours a year of paid time off to be involved with community service. We don't force or push it upon anybody, but when somebody does something that they want to share about, we encourage that, because it could be inspiring to others that either want to be involved or trigger something else to happen, right? And so there's people here that quietly go to the soup kitchen every Saturday for years and nobody knows about it. And then there's other people that, support, Second Nature and all these other things of building out meals for people in different ways. And we recently did this backpacks for going back to school for kids that were under, privilege or whatnot. And so that was a great team building event, but also made a meaningful impact to the community. So it's things like that we're definitely proud to be a part of.
And how do you think that that's amazing to hear. I mean, that's incredible. And I think it's so important. But how do you think that then echoes into the culture within SES or the culture about how you go about, working and leading within the business?
Well, SES is a small company by name. We're not a household brand. We're in a tough job economy where there's a lot of, marquee brands out there and great colleges that people can go to, basically pick where they want to work. And I won't say the person's name, but we were recruiting about 2-3 years ago, and this gentleman came on board and said, I had another offer, and I decided to come with you guys because your website and kind of your experiences and your LinkedIn posts spoke to me, and that's the company I want to work for. I might get paid more here, I might go do this, whatever, but I want to, we spend a lot of time at work and want to enjoy and kind of be passionate about the people we work with and what we're doing. And so that meant a lot to me as a leader, and that's kind of who we are. We want to create an environment where people want to be in, and we don't have a committee planning, event planner person. We don't have we have corporate HR, but at our company, we need everybody to chip in. And so it's kind of be the world, that you want it to be, and be a part of it, rather than just say, hey, I'd like, you to do that and I'll participate. Everybody kind of chips in.
I think that's great advice for any organization. I know within INSTANDA, that's how we feel. And we often talk about culture is not the values you've got written on the wall or something like that. It's everyone every day,
Right.
and the way that they behave, and the way that you think about things, and the way you treat each other, and all of those elements. That's the culture of the business. As you described earlier on about that poor advice you got, which is it didn't matter, get to the top.
Right.
Do you want to work in those organizations? The employment landscape is so competitive. We have to want to get more out of it, and I think that really resonates with me. What you said, you'd be the business, sort of business I'd want to work for.
I appreciate that. Thank you.
And so I just want to end up with like what next for Shaun, what next for SES. Give us a flavor of what the future holds.
Well, I about a year and a half ago was fortunate to bring on a successor, Colleen Hart, who's now running our real estate and investor division and is doing a phenomenal job, not only learning but advancing the business at the same time. And she's already pointed out several things that I probably could have done better, and is making some really nice changes. So
humbling, isn't it?
Yeah, it is. But in a good way, right? And so we're creating opportunities for people. We had some with the inflation and interest rates and all that kind of stuff, the housing market slowed down a little bit, and so we're having to be basically creative and thinking about how we continue to grow and resourceful and all that other stuff. And so one of the things that we're obviously looking to do is expand our menu offering to complementary products and services. And so right now we're focused on property and casualty for single family. We do have a small multifamily program as well, and we'll expand on that to larger multifamily. Right now we're only long-term rentals. I can see us doing mid-term rentals as well as short-term rentals. We have self-storage and condo and other types of maybe even some retail that we can do, anything with schedules of real estate. But there's also other coverages that we might be able to add, whether it be property management liability or flood or quake or excess liability and all that kind of stuff. So I think it's just rounding out the menu offering and further penetrating and be even more relevant in the marketplace. We're always looking at acquisition opportunities, and builder's risk is one of the things that's on our plate. Having a build to rent economy and then moving into the renter, property and casualty for the renter properties that are homes for rent, if you will, I think is a logical expansion. So things like that, I don't think we're going too far left field. It's more just linear things that we're looking to do. And it's something where we can add value.
Yeah. I think we might. I don't know whether it's me or Shaun, but I think we might have lost the sound like the bit then. So anyway, I think that's a wrap. Thank you, Shaun, for joining us today. Really appreciate you sharing how SES Risk Solutions keeps its policy holders undercover, and learning about how you take the culture from what you want internally and outside and impact the environment that you're working on. So until next time, this is me, Kevin Gaut, for Under the Cover with INSTANDA.
Thank you, guys.